The Fed just cut rates again. Everyone's happy. But did you know that every time this happens, the gap between the rich and the middle class in America grows even wider? Why does that happen? Let's understand. Chapter 1. What is a rate cut? The Federal Reserve is like the bank of all banks in America. It decides whether money will be expensive or cheap. When the Fed cuts interest rates, it basically means money becomes cheaper. That means people and companies can borrow money easily to buy houses, expand businesses, or invest in the stock market. Think of it like this. When money becomes cheap, everyone starts spending more. Demand rises, and cash starts flooding the market. Sounds good, right? But here's the twist. That growth doesn't happen equally for everyone. Chapter 2, the hidden effect. Dispersion. Whenever the Fed cuts rates, one word quietly activates in the market. Dispersion. What does it mean? In simple words, some people win and others lose. After a rate cut, most of the money flows towards strong companies, the ones that already have power, technology, and reputation, like big tech firms, AI companies, and large banks. Smaller companies, the ones with fewer resources, don't benefit as much. It's like the Fed pressed one button, money started flowing easily, but only the big players grabbed the biggest share. That's why, when the stock market rises, only a few sectors explode upward while the rest stay stuck behind. Chapter 3. The AI boom, the new winners. Let's take AI as the best example. In 2025, experts expected U.S. companies' profits to grow by 12%, but that number dropped to 9%. Still, almost all of that 9% growth came from AI-related companies, like NVIDIA, Microsoft, and utility firms supporting the AI boom. So, if you invested in them, you won. But if you ran a small retail or manufacturing company, your growth probably froze. Cheap money helped AI companies grow even faster because they already had strong technology and investor trust. That's the real face of dispersion. In the same economy, some people take off like rockets, while others are left in the dust. Chapter 4. Gold, the silent gainer. But not everyone runs to buy stocks. Whenever the Fed cuts rates, some people move their money to safer places. And that's when gold starts shining. In 2024, central banks bought over 1,000 tons of gold. Why? Because when interest rates fall, the dollar weakens and people look for safety. And gold has one simple rule. The more uncertainty, the more it shines. So, when easy money flows into the system, some use it to buy stocks. Others treat gold as real money and store value there. Chapter 5. Bitcoin, the new digital gold. For younger generations, gold now has a new name, Bitcoin. It runs more on belief than on logic. If we believe it has value, then it has value. That's why every time the Fed increases liquidity, Bitcoin tends to rise too. But remember, Bitcoin is not gold. Gold might fall 3%, but Bitcoin can drop 40% in a day. High risk, high reward. But never forget the difference between logic and greed. Chapter 6. The Fed doesn't control everything. The economy does. Many people think the Fed controls everything, but in reality, the Fed only reacts to the economy. When the economy slows down, the Fed cuts rates. When inflation rises, the Fed increases rates. So the Fed isn't a magic wand. It's more like a thermostat, adjusting the temperature based on the environment. And the entire system runs on just one thing: trust. If people lose faith in the banking system, no rate cut, no gold, and no Bitcoin can save it. Chapter 7. What you should learn from all this. Every rate cut is a signal of opportunity if you're smart enough to understand where to invest. A signal of caution if you follow the crowd blindly. When rates fall, markets often get a fake confidence. People see the stock market rising, but they don't realize it's just a temporary money wave. If you're an investor, study which sectors actually benefit, like AI, gold, and digital assets, but don't chase hype blindly. And if you're a normal person, just remember, when rates are cut, your loans get cheaper, but the cost of living might rise later. Chapter 8. Final message. A rate cut always sounds good, but every time money gets cheaper, the world becomes a little more complicated. Some become winners, others are left behind, because this system doesn't run on money, it runs on trust and understanding. So next time you hear on the news, the Fed just cut rates, think carefully. Is this rate cut a gift for some, or a warning for others. If you like learning complex finance topics in clear, simple language, like this video, share your thoughts in the comments and subscribe to the Easy Finance, where we make money concepts simple, emotional, and real.